G'day there, Wealth Press subscribers, viewers, traders, and investors. It's time for the Monday Morning Roundtable, and I'm joined today by Adam Sarhan, Jeff Zananiri, and Roger Scott. Gentlemen, welcome.
Thank you for having us here.
It's always my pleasure. Today, I'm going to start with you, Adam, and I want to talk about the incredible volatility in cryptocurrencies, particularly Bitcoin. Bitcoin's 60 to 65% of the trading volume in all cryptocurrencies, of which there are over 2,000 quoted presently. The market cap topped $1 trillion for the first time last week. I know you're a Bitcoin holder. However, the volatility is enough to cause your spleen to exit through your nose at times, and I'm curious as to how you deal with that.
Yeah, it's a really good way of putting it, and I think you're being nice there as well. So there's the old expression, it's not for the faint of heart. So definitely crypto as a volatility move, I think one day in crypto equals almost a year or 2 years of all the volatility in the S&P 500 added up, and then I think doubled. So be very, very careful from that standpoint. If you have a cushion, which thankfully I do through a bunch of other stuff, then you have the ability or the luxury to sit back and let the markets pull back. It's not an instrument to really be traded the way you would trade a momentum stock, or you trade currencies or traditional currencies or commodities with entries and exits and so on and so forth. This is more for people that want to accumulate a position. That being said, it does function like a market. You have buyers, you have sellers, and there's supply and there's demand. So you're going to have moves where it bases for a long time. You can have breakouts in the base. You can have big rallies, and then you can have pullbacks and corrections and bear markets along the way. That's just the lay of the land for any market that has buyers and sellers on both sides of the fence. So keep all that in mind. You have to understand where you are in the cycle. You early or you late. We've just doubled since December, so clearly you're not early. And then the other side of it, I really need to see if Bitcoin can actually do what people think and say it should do, which means it's a currency where we exchange it and pay for items. Tesla said they're going to start accepting Bitcoin as payment. But really, most people in the crypto or the Bitcoin space specifically, they're just buying it and they're hoarding it. They're not even using it. So if there ever becomes a practical application of it, then that's a whole nother level. But for now, this is obviously still the very early stages. One big investor said it's akin to buying internet stocks in 94 or 93. And you have a lot of applications for it. And the sky's the limit. But in the near term, we pulled back a little bit. So we're interested to see what happens going forward.
Sure. So, Jeff, I know that you also are somewhat of a crypto speculator, more so than a longer-term invest and hold guy. Does the volatility in crypto give you pause at all, or does that just make you sort of hot and horny for the big swing trade?
I think that, being a seasoned trader, what you really learn is that you can play with fire, but the way you play with fire is by, and Adam was really insinuating this very directly, but I'll say it in a different way. You can trade anything, you can invest in anything if you know how to manage risk and you know how to size your positions. And so when I'm dabbling with, I don't necessarily trade. I've been just owning a couple of cryptos, and the big ones like Ethereum and Bitcoin, and in small size, in a tolerable size for me, because that's the only way I can do it. I'm not per se someone that would be all in on it. I don't think that it's a prudent thing to do. I don't like to go all in on anything that's kind of like a story. And so that's the way I'm looking at it. Something I learned about this weekend, you guys might find interesting, are NFTs. Do anyone know what an NFT is? It's a non-fungible token. And so it's a new crypto. It's a new form of crypto where companies that already exist are creating tokens for their brand. Like the NBA has one right now that I just learned about. And so you can pay for tickets to games, you can buy a new Heat jersey, you can buy a hat, whatever, through these tokens. So it's not just some fat kid in Malaysia that's providing the grease for people to trade heroin across borders. There's major corporations that are getting on board with how to use crypto. So I think it'd be a little bit, I don't know, curmudgeon. You'd be a curmudgeon if you didn't realize that these things are happening in reality. Curmudgeon's just like a nasty old guy. It was my birthday, so I can use that word.
You bet.
That doesn't, that's against technology and against change and against new stuff. And so you don't want to be a curmudgeon with this stuff because it can evolve and adapt in a way that we have no clue. I mean, the NBA has their own NFT now. So I just learned about it. Somebody was telling me about some sushi token or whatever, and NFTs, so whatever. I started reading a little bit.
Roger, do you have cryptocurrency in your portfolio? Does the volatility scare you at all?
Well, I don't have cryptocurrency in my portfolio. I'm very skeptical about cryptocurrency. I do agree with Jeff. It is there. It's not going away.
There was a ETF launched in Canada last week, the Purpose ETF, and it came out of the chute rather strong. I'm going to do a attempt here, but there's the chart of the first 3 days of trading. Came out of the chute at $10, rocked on up to 11, and now, of course, it's sort of emulating the trading action in the coin itself. But clearly, there's a lot of demand. It first came out; it actually went up 400%. It doesn't really show that in the chart, but there's obviously a lot of demand. Now, let's talk a bit about the go away from home stocks. We're starting to see signs of life in some of the airlines, travel stocks, cruise ship stocks. Adam, do you have an opinion as to the advisability of jumping into that lot yet?
Yeah, actually, I'm a big fan. And for the Alpha Trade subscribers, we just put out 2 big wins in that space. We had a big gain in Marriott. I think it was 113% gain in a day. And Norwegian Cruise made some good money there as well in the last 2 consecutive weeks. So we've been on that trade. The idea here, like I mentioned in the show a few weeks ago, but I'll mention it again because it's a very popular concept here and it's super simple. It's what I call the COVID X. You've got this going on. This side of the X, if you can see the hospitalization cases, numbers are going down. And this side are the vaccines going up. And the market understands the X. Normally, X has a negative connotation. Here, it's a very positive one because we're getting back to normal, or every day we're taking one step closer to getting back to normal. So the market is a forward-looking mechanism, right? So it looks forward 3, 6, 9, 12 months, whatever the case may be. And it understands that stay-at-home dynamic is now getting behind us. And over the next 6 to 12 months or 18 months, 24 months, hopefully for sure, we're going to be back to normal. And, this guy right here can't wait until that's the case. And I'm sure there's many, many billions of people all over the world. So the investable space, you've got, when you look at valuations or you look at areas that are attractively valued, offer some good upside. Think of the basketball being held underwater. When you let go of that basketball, it just pops, right? So you've got a lot of these travel-related stocks, even banks. They've had a big move over the last few months, mind you, but they haven't even recovered from where they were a year ago. I think this is right around that 1-year anniversary from when the shutdown in March of 2020 happened. And we're right around that right now. And these stocks are still 30, 40, 50%, in some cases even more, below the high from where they were just a year ago. So if we do get back to normal and we have all of the trillions of dollars of stimulus that has been just injected from not just the monetary, the federal banks and central banks around the world, but also from the fiscal side, from Congress and the free checks and all that kind of stuff, those basketballs underwater, I think, have a lot more upside.
You bet. Jeff, do you have a growing affinity for the return to travel stocks?
I want to return to travel. I think those stocks have, congratulations and kudos to Adam for having those in alpha. I think that a lot of the move personally has happened already. They've been forward looking and we're kind of at that. They are forward looking and we're at the point now where what we thought, was going to be a reopened situation is actually the situation happening. So I see the market cooling down in a lot of the most high flying sectors like the reopen, financials. They've been running red hot. I mean, they've been running super hot. So I think that trade, that investment is going to work well for years. But I think in the intermediate term, you might have a little bit of a challenge. One thing that I'm paying close attention to is interest rates, which has been really just like what we had crazy volatility last week and you can't, you could turn away from it for a minute. We're having happy days here again today, But if that 10-year rate gets above 150, everybody loses their minds and they puke the stocks and they buy them back the next day. So you have to pay really, really close attention to what those rates are doing. I do expect that the Fed is not going to let it go crazy, and there's going to be an action that would happen if we did see another parabolic leg on interest rates going higher. I think that the Fed would introduce a new type of QE that would be able to control the curve. And, that's something they've been just talking. They've been keeping rates at zero, but they can certainly do a lot more. They have done a lot more. So I don't expect them to let that get out of control. That being said, I was a little more cynical about people going back and living life. And here in Florida, having a little bit of normalcy and seeing how many people have come down here and seeing how well restaurants are doing that have been reopened, I've adjusted my forecast to realizing that this is going to be a wild summer in terms of people traveling. So I guess what I'm trying to say is the basis and the fundamental case for the reopen being strong is very sound and very good. And what Adam said about the X is so amazing. I just think you need to time it a little bit from an entry point standpoint.
Right. Okay. Talking about the US 10-year, I mean, it did breach 1.5 and it's now just down at 1.4. What factors do you see, Roger, that could possibly drive it in the wrong direction, meaning up, or cause it to sort of correct to the downside a bit? Where do you see the momentum strongest?
I think the market is still too strong. I think the stimulus is causing the market to hit the reset button, and I think we're going to be quite bullish for quite some time. So I think the natural tendency will be for the bond market to remain in the current trajectory and maybe bounce a little bit, stay here, but ultimately we're going to see interest rates go higher.
Commodities responding to the we saw the House approve the $1.9 trillion stimulus package. Now it moves on to the Senate, and how much of that is a factor in the commodity price sell-off that happened on Thursday, Friday? There's a lot of people saying, yeah, that was just a convergence of perfect events that are now no longer present, and so we expect those commodities to return to their sort of normal ranges, as far as ranges are normal. But what's your take on that, Adam? Did you happen to see a correlation there?
Yeah, I think there's a really, really important point, kind of what we discussed earlier with crypto, as far as any market that's publicly traded where you have buyers and sellers. The markets move in one of three phases or states. They have a bullish state, an uptrend, a bearish state, a downtrend, and then a sideways consolidation in between each one of those. So commodities have been, for the most part, not all of them, but for the most part, have been just on a major tear to the upside over the last 6 to 12 months. Some of them have had down moves, but for the most part, the commodity complex have just been going up. Now, they're very extended on a short-term basis. When you see, there's an expression, an old adage on Wall Street says, the market takes the stairs up and the elevator down. It goes up, moves sideways, up, and then moves sideways, so on and so forth. So commodities have had a huge move, almost all of them, except for some of them. And the ones that have had those huge moves are super extended to the upside, and they're just simply pulling back. Some of these pullbacks are to be expected, and they're working off their overbought conditions. When they're overbought by so much and they just pull back, you really want to see, James, if it's a pullback into support, which is the 50-day moving average or prior chart highs or what have you, or if it's the end of a move and the beginning of a new downtrend. So for now, something like sugar, it gapped down really big last week. That was not a normal pullback. That's a big, big decline. Now, you still are up for 12 months or 18-month period, but a move like that is really, really big. Now, a pullback in wheat or soybeans or corn or something like that, that's more of a nice normal pullback within a broader uptrend. So you really have to be careful of what you're looking at. And to Roger's point about relative strength, which I think is absolutely fantastic, you really want to be careful of, rate them. Gold, for example, and so hasn't really moved for a long time. It had a huge move after COVID, but then for the last 4, 5, 6 months, it really hasn't moved. That doesn't mean necessarily that it's not going to move going forward, but the fact that it hasn't moved tells you a lot, and it's exhibiting poor relative strength, right? Something like copper, which is at new highs or multi-year highs, what have you, that's had a huge move to the upside. That's exhibiting very strong relative strength. So analyze each commodity individually and ask yourself, are you in an uptrend? Are you in a downtrend? You moving sideways? Are you extended in the move early or late? So on and so forth. And the same thing is true for crypto or stocks or anything that has a bid and an ask, so to speak.
Sure. And what's your exposure to commodities or their derivative stocks, Jeff?
Right now, zero. I was long miners and I got out last week. I don't know, like Adam said, I feel like the moves got really crazy and extended and stretched, and nothing lasts forever. And you have to time these things. That's at least try to. That's my raison d'être, as they say in French. Like, I'm not going to sit here and just say, yeah, we could just put money in every day and it's the same thing. Dollar cost average. No, that's not how I think. I think you have to be disciplined. You have to be careful. You have to have a sniper's fire on where you want to buy stuff. You have cases you're bullish on. You have cases you're bearish on, and you time into these things. It's really a difficult thing to do from a psychological perspective because there's FOMO. Copper's number one. Copper's number one. Copper's number one. I should just buy. But the thing is, when you start getting stretched, you can wait for these pullbacks because they will invariably happen. And then you can time in, you can leg into these things, and it will give you opportunities to. And I said it last week before we even had the wheels fall off the market, that there are going to be massive moves in the market up and down. In assets, in stocks, we saw 20% moves off the high. You're going to see that in every sector. You're going to see that in every name. So you just have to time it. You have to be patient. You have to be patient because this is the regime we're in. We're not in a low volatility regime. We're in a bull market still, but we're in a high volatility bull market with big ranges.
Mm-hmm. Wow. Okay. And Roger, so how does the cold commodity move, in your view, reconcile with the return to travel stocks, the imminent quantitative easing moves by the central banks? How do all these things sort of reconcile to your recommendations to your subscribers this week?
The economy is looking very positively ahead. But with that said, we've done a lot of damage and we've taken a lot of our future away from us with this COVID. So to continue seeing interest rates this low, even if the market begins doing well, it's just not going to happen. We are going to have inflation. You can't have our cake and eat it too. Either the economy is going to heat up and we're going to have inflation, or economy is not going to heat up and we're going to go back to where we were last February and we're not going to have inflation. But I don't think that's going to happen. I don't think that's realistic, especially with all the stimulus coming in. We are going to have inflation. And if we're not going to have inflation, certain aspects of the economy are going to heat up. There's just not going to be a question about it.
Gentlemen, we're going to leave it there for today and come back to you throughout the week. Thank you very much for joining me today.